What is up, YouTube? Welcome back to Stocks by the Numbers, and it's Tuesday. We're getting started here after this holiday weekend, and we had a big move here on DraftKings Incorporated, ticker symbol DKNG, listed here on the Nasdaq. Stock down to 35.40, down almost 5.5 points, 13.25%. Hit a low of 35.27 on the news of Illinois supposedly boosting its sports betting tax. So apparently, obviously, everyone exited this stock, supposedly, and they brought it down a chunk on, again, sites that supposedly this increased tax is going to, how could we say this, potentially keep people away from DraftKings and sports betting stock, and they could potentially generate less revenue, which, in my opinion, is absolutely ludicrous. The revenue of this stock has been growing significantly well. We have a market cap now at this level of sub 17 billion. We spoke about this last time, and I mentioned it multiple times in the Discord, that every time this stock, it runs up, as you see, to the mid 40s, and then when it pulls back to 40 or the low 40s, that's when I say, in my opinion, it's on sale. Buy the dip, get ready for the next rip. Boom, back up to 45. Then we drop to 40, boom. Then we go up to 50. Then we drop to 39, boom, up to 45. Slight correction to 42, boom, back up to 46. And then we broke out of the wedge, started dropping. Right here, we came to 40. And of course, in my opinion, I probably would have stepped in and bought that dip. And then, boom, we have the big drop today. So, the way I look at it is, if I liked it at 40, 39, I love it personally down here at 35. And also the fact that the tax got raised to whatever, 25, 30%, whatever the heck it is. First of all, look at the growth of this company over the years. And also, even the last couple of quarters, we eclipsed that billion plus mark now, quarter over quarter. So, obviously, the business model right now seems pretty solid, and the growth is there. But also, the capital gains tax, all people do is trade. A lot of people give me slack because I look at the longer term investment. I look at the long term picture, and people want to know, what's it going to do tomorrow? What's this going to do next week? Should I buy calls? Should I buy puts? Everyone's in trading mode. No one's really in investing mode, which makes me laugh because, of course, as we know, capital gains tax, short-term capital gains tax, 35%. So apparently a 35% cap gains tax on your trades is not stopping any of you from trading. So I will reiterate again, in my opinion, the fact that this gambling tax or sports betting tax, whatever it is, just jumped from 15 to 30%, again, still less than capital gains tax, chances are, in my opinion, that's probably not going to hinder anyone from placing a bet in the great state of Illinois. Because at the end of the day, if you can obviously try to determine the outcome or pick the winner or pick the spread, however it is you play it on that app, at the end of the day, people are going to keep doing it, in my opinion, just like they continue to trade. And again, we hate taxes, so I appreciate the pullback. A little bit of an overreaction, in my opinion, but I appreciate the pullback. But again, even if the income tax bracket you're in, if your short-term cap gains tax, let's just say, is 20%, and then all of a sudden you have to pay 25 or 30%. Yes, it's going to suck. Yes, you're going to be upset. But also at the end of the day, you know that it's a great way to grow your money. And of course, if you're right more than you're wrong, it's essentially free money, right? And that's what sports betting is. So even though, again, the tax got increased 10, 15 percentage points, if you're still able to pick the outcome of, the NBA playoffs or whatever the heck is going on, whatever you're into, then chances are you're probably going to keep doing it so that you can keep generating income for yourself. And the tax is going to be the tax. It really doesn't matter, in my opinion. But a couple of trend lines here to look at. So it looked like we were in this little descending wedge here. This is back Friday, May 17th, right? So if you extend that line down, that is now our resistance level, along with this bottom trend line here that I drew out across here, May 22nd. You can see coming across the bottom of those days, extending that out, right? So now we have a couple of different resistance levels to now get back above. But also, more importantly, if we back it up here, we can see stocks right down here right now. And if we draw out a trend line from the bottom of March 27, 24 to April 2nd, 2024, connecting to the bottom of April 25th, 2024, and we drive that down, we can see, let me back up a little bit, we can see that the bottom of this trend line is, yeah, we're looking at like 33 3/4 maybe. I mean, absolute worst case scenario, we could drop all the way to 32, but I seriously doubt it. And of course, if we do, again, you know, I personally like it here at 40. It always had that bounce. So for it to come down to the mid 30s, in my opinion, I think it's on sale. And if it does drop to the low 30s, now it's on the clearance rack. So, you know, it's really up to how you would want to play it. We had a gap up also back here, January 17, 24, going into the 18th, right? And you can see the stock pulled right back to fill that gap. So we could potentially bounce from here. This could be viewed as an overreaction. I'm sure there are a bunch of people out there who are buying the dip because, of course, before today's announcement, the stock was raging and everybody liked it, right? So that's why I'm saying, in my opinion, the business model hasn't really changed. And again, we're also talking about one state. I really don't think it's going to scare anyone away, but again, you can see we come down to this bottom trend line. We're in the high 33s, potentially maybe about like 33.60 in my eyes, worst case scenario, and then we could potentially start to bounce. If we switch over here to stock charts, we can see that on the weekly, the RSI is now about 42.5, we'll call it. We just broke below the 50-day moving average, 35.81, which means next stop could be the 200-day moving average, which is, what do you know, high 33s, sitting here at 33.72. And then if we switch back to the daily, we can see now we broke below the 200-day moving average, 36.91, and we're sitting here sub 35.5. Look at the RSI, though, fell off a cliff. Now it's at 28.5. So you're probably going to have a bunch of traders who are going to pull up DraftKings. They may potentially agree with what I'm saying, but more importantly, they'll look at the technicals, the fact that the stock was holding steady above the moving averages. We just broke it, could potentially be on sale. RSI sub 30, so now you could potentially get that pop right back up to 37 plus maybe. And, you know, you could potentially make a quick profit like that. And also, if we check the pivot points as well, we can see that on the daily next support level, 34.08. So high 33s, low 34s, in my opinion, technically should be the low of the low here. And again, next pivot point here on the weekly is, you know, down here at 28.5. That'll be a drastic overreaction if that happens. But again, the 200-day moving average, 33.71 roughly. So again, in my opinion, company growing nicely, and again, anytime it was sub 40 or at 40, anytime you bought that dip, going back from when the bull dropped, basically, anytime you bought that dip on DraftKings, you would have made money, minus obviously about the last week or so since it's been selling off. But again, in my opinion, the short-term capital gains tax is not scaring any of you away. Everyone is still trading. Everyone is paying other people to give them trades and make money in the short term. Not many people are holding investments for 12 plus months to lower that capital gains tax. So that's why I'm saying, if people don't care about it in the investment world, then I'm sure people aren't really caring about it in the sports betting world. And again, this is not across the board for all the bets being placed on DraftKings. This is not all 50 states. This is Illinois. And of course, not to get political, but Illinois is kind of falling apart. So the fact that they, you know, raise this tax because they're looking to obviously generate more income for themselves to try to just get control over their cities and their states over there in Illinois, kind of understandable in my eyes. But also at the same time, again, if we look at the overall business of what we're looking at here with DraftKings, in my opinion, this does not affect the business at all. And basically, I'm seeing a $40 stock that you can get on sale right now. And again, if we do have to deal with some short-term volatility and drop down to 34, 33 before bouncing back up and leveling out, well, you may have to deal with some short-term volatility to get that long-term growth. And also on top of it, as this news came out today, we have DraftKings maintained at Outperform by Oppenheimer with a $60 price target. And we have DraftKings target maintained with a $60 price target by Needham. Again, this came out today as the company supposedly took this big hit on this increase of Illinois tax. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.